Ladies and gentlemen, welcome back to Data Dispatch. Listen to this important statement by the Palantir co-founder to kick us off in today's video.
Of Palantir, and we have watched this stock incredibly closely, and all we see over and over again in the past year is record high after record high. This is a company that aggregates data for all kinds of businesses. It's really expanded, but it has done a lot of work for the U.S. government. So as it continues to do so well, it's no longer a startup. It's been in business for several years. It's a little curious, though, to say that the current administration has been very negative toward tech.
I think the current administration could do things to destroy companies, to harass them, to stop them, and yet you can still have amazing companies performing really, really well and growing quickly. Palantir worked really hard for a long time on helping organize information for companies and helping kind of get in and build the infrastructure. And it turns out that the ontologies and the other technology Palantir built makes enabling AI work really well. So I think Palantir's biggest source of growth the last 4 years is actually in the U.S. enabling Fortune 2000 companies to deploy AI much better than anything else. And so that's obviously been a hugely powerful trend going on in the world right now. And Palantir is still bringing in top talent and acing that. So I think they're in AI, they're in defense, they're in the middle of the hot area, they're crushing it.
We opened with the
Interesting statement from the Palantir co-founder here, basically saying that all these Fortune 2000 companies, Palantir is doing a wonderful job helping to allow these companies to deploy AI much better than anything else in any type of software out there. And it turns out that the ontology and other technology that Palantir built really makes this an efficient and a productive process. So we're going to be talking about where does Palantir stand right now? Sitting at about $42, down about 2% on the day. We see the general market that pulls back here about 1% with crude oil prices that actually have a decent drop, and we see a sell-off among tech stocks. We're going to be talking about everything you need to know. If you're new or returning viewer, hit that like button, subscribe for daily videos, and of course, not a financial advisor, collecting all the data and dispatching it to you. Now, Palantir at 42.43, what we are seeing right now is a big change in momentum. And what I mean by that is typically when we see any type of red in PLTR or, tech stocks, we start to see that overall sentiment that starts to be changed in terms of perspective. And what I mean is by just looking at the headlines right here. Is Palantir too expensive at 43? The short interest is rising. That's a warning. Should you buy a Palantir right now? Wall Street's really giving you a true, clear answer. What you're seeing right here is overall the whole perspective shifts. And that's why it's important to really analyze what's happening within Palantir and how big Palantir has grown in terms of market capitalization. Now, 42.43 is a pretty high price for Palantir. However, it's a very big accomplishment to say nonetheless. Down about 2% of the day, considering Palantir's up well over 100% over the year, doing very well. This does not bring on uncertainty, fear, or doubt to me right now. Now, options activity looking actually pretty even in terms of the calls in the puts. Specifically, talking about the prices and with Palantir stock. Remember, yesterday we had the announcement that Q3 earnings for this year are going to be released post-market November 4th. And that is the day before the election. There's going to be a lot of volatility that will likely probably come along with that. But let's analyze this article. Talking about, is Palantir stock too expensive at $43? And specifically with this article, we're not going to read a word for word, but in summary, talking about what's really been fueling Palantir's stock price. And the first thing is the revenue acceleration. You can see right here, just in terms of revenue on a quarterly basis, has been growing at this nice linear line and doing fairly well. And that between 2021 and 2023, that Palantir's revenue managed to increase. It says here, as the chart indicates, as a more protracted growth that left some investors really kind of questioning what is the potential behind Palantir. However, I think that's where the use cases come in and they step in terms of AIP that has really changed the dynamic of the fundamentals of Palantir. And we've seen that with the customer growth and specifically the commercial customer growth while maintaining those governmental contracts and still expanding on that side of things. You see, Palantir has these two sectors, the commercial side of things and the governmental side of things, and they're both growing at a fairly quick rate, which has been incredibly bullish for PLTR in terms of those earnings reports. So the fact that commercial customer count here is increasing along with the actual AIP software development shows you the utility that Palantir is incorporating with AI for these multiple companies. What this is resulting in of course, is profitability and now making the headlines, and with the accomplishments and with the recent inclusion in the S&P 500, that brings a lot of institutional buying and even passive buying. People that are investing into their 401ks, into their IRAs, just tracking, either buying ETFs that are tracking the S&P 500, are buying Palantir without necessarily even knowing what the company is. So what you're seeing here is being part of this index is a major accomplishment. And the partnerships with some of the AI bigwigs, Microsoft, Oracle, these are continuing to unfold. So what does the valuation suggest? And right now, I like this article pinpoints specifically when all the price to earnings multiple is sky high, 256. And you see here, price to earnings ratio, right now, that is disconnected from the current fundamentals of the business. And I couldn't agree with this statement right anymore. And that is because the valuation is being tossed out the window. Yes, that's a big criticism. It should not be completely ignored. But right now, we're not seeing that being taken into consideration. I mean, just look at Palantir's price here over the last few months. And especially with the S&P 500 inclusion, and now you got the earnings that will be coming up, Palantir, of course, can have any type of volatility that comes at it with the headwind, but its valuation expansion right here cannot be denied compared to some of the other SaaS peers. And it's at a very high, looking at talking about Snowflake right here, ServiceNow, C3.ai, other AI companies. Palantir is trading at a high premium, but there is a lot of trendiness behind this stock. So talking about, is it too expensive? There's an opinion here talking about that Palantir is overbought at the moment. We see this in the RSI. We see this, that it is in kind of an overbought territory. However, investors talking about buying opportunities, the risk for downside potential is high. I don't think we can disagree with that. And that is because people are sitting, basically everybody's up on Palantir right now, and specifically what's been happening in the market. But we're talking about entry positions. You know, for those people that have been holding, waiting for any type of pullback, a little bit of a correction to get in at a better value, those are not necessarily the worst things. Sitting on the sidelines, that is not a bad thing. Now, talking about what's happening in the market, this is also going to bring in volatility, and specifically what's been happening to the tech stocks. Now, we see Wall Street that pulls back here after the price of crude oil tumbled. Now, why did the price of the crude oil tumble? That is because crude prices have been weakening as China's flagging economic growth raises concerns about its demand, the actual overall demand for oil. And at the same time, we're also seeing those Middle Eastern tensions, the conflicts that are continuing to rise. We see some fear and uncertainty talking about possible retaliations. That's also bringing uncertainty to the markets. Now, on top of that, you also have NVIDIA, the heaviest weight on the S&P 500, that fell over 4.5% today in its cool down for the chip company. Now, why did NVIDIA slide today? One of the big things that everybody's pointing a finger at is that in the morning session here, we see a lot of semiconductor stocks. They fell after ASML, the biggest supplier of equipment used in making advanced chips, pre-announced weak earnings. Now, ASML expects a fiscal year 2025 sales to come in between 30 billion euros and 35 billion euros at the lower half of the range it had previously provided. So with this, if you have the biggest supplier of equipment used in making these advanced chips is saying, hey, we're not thinking earnings is going to be the best, pre-announcing right here, reducing their guidance, what they're expecting, this has an impact on NVIDIA. When NVIDIA comes down, that has a whole impact on the market and on all of the tech stocks, and that's specifically what we're seeing right now. Now, you also have, in addition to what's happening, is about the interest rates. Treasuries, they resumed after the holiday on Monday. Yields sank following a weaker than expected report on manufacturing. falling to 4.03%, but still hanging about the 4%. But right now in interest rates, the Fed, remember, began cutting interest rates. We have with the 50 basis point cut, but they're working to keeping the economy humming instead of just fighting inflation. So it looks to be continuing to cut rates through the next year. We'll see what happens, because remember, we just had the jobs report. Inflation came in a little bit warmer than expected, which could help ease the brakes further on the economy if they continue to cut rates. Now, if they can pull off the perfect landing where they get inflation down to 2% without causing a recession, that would be the achievement of the soft landing. What do you guys think? Down in the comments, let me know. Palantir at 43. Do you think it's too expensive? Do you think the market's a little high right now? Will we be seeing a little bit of a pullback? And what's your opinion on NVIDIA? Peace out. Take care. I'll catch you guys later.